My name is Dick Jones. I'm the tax problem guy. You know, if you're going to deal with the IRS, the one thing you really need to know is you need to plan. And by that I mean, if you're going to file your income tax, what do? You plan to see how much your tax liability is. If you're a business, you go into your accountant before the end of the year and you see if you need to buy something or if there's something that you can do to lessen the taxes that you have to pay. That is planning. That is a good thing to do. The other thing that you do when you're a business person, and if you owed money last year, you plan your estimated payments so at the end of the year you won't have such a big tax liability, and then create a tax problem. It brings to mind a case that I worked not long ago that the guy was incorporated and he had about a $26,000 tax liability. Well, he had been working this case on his own, and by the way, I don't think that's a good thing to do, but anyway, he got his bank account levied for $19,000 of it. So he had about $7,000 left to pay, and he came to me and he says, "Can you help me? I'm not doing a very good job of this." And I said, "Well, I think I can." So I went to the revenue officer after I got the proper power of attorney signed and asked her what we needed to do to set up a payment arrangement for about $300 a month, which is what the guy told me that he could afford. Well, she told me that they would need a new financial statement because the financial statement that they had on file showed that he had a loss in his business and he couldn't afford to pay anything. So I told the guy that. I said, "You need to get me a new financial statement that shows that you have the ability to pay this debt at $300 a month." If they would have stayed with a loss, since he was a corporation, they would assess the trust fund penalty against him right then and there, and we didn't want that to go onto the personal side because he was a prominent person in town and we sure didn't need that. So anyway, he gets me a financial statement and I take it in and it shows that he can pay $500 a month. So guess what? IRS's statement to me was, now he can pay $500 a month. We want $500 a month. And I told the lady, I said, "Ma'am, we can't afford to pay $500 a month. There's just not that much income." I said, "There might be right now, but if you look at the seasonal up and down of it, there's not enough income." She said, "Well, go back over it with your client and see what can be done. We will take the last 6 months if that's what it shows." So I went back to the client, we found some more expenses, and sure enough, we got it down to about $300 a month. But that's what I mean about planning. If you're dealing with a revenue officer, or if you're dealing with IRS on your income tax, the thing you need to do is do some pre-planning, whether it's with an accountant, or whether it's by yourself at the kitchen table, and see what you think you're going to owe. If you have a tax problem, call somebody and put somebody between you and the IRS, which could be me, 573-341-5578. But again, the sum and substance of everything you do with IRS, you should pre-plan. You shouldn't take your taxes in on April the 1st and say, "Prepare these taxes," when you don't have any idea how they're going to come out. Pre-plan if you're going to play with the IRS. Thank you.